Hi, Richard here on Tuesday the 8th of February, and we start off again with a chart of the US dollar weekly index, and we can see that going all the way back to 2008 we continue to find ongoing support. The big test was whether or not this was going to be broken, but clearly the world that's trading this is watching it, as we've got a very bullish hammer that's put up at the close of last Friday, and it's even off this line. So look, there's nothing to say that it cannot come down and break down, but if this is the case, then this is most definitely obviously the ABC correction, wave 2, and this is a little wave 1, 2, and we would expect that direction to go up. At the moment we've got one light bar on the market force, which suggests that the trend obviously by the price action has weakened, and that would indicate that we're going to head north. So stand by for that one. As we go and have a look at the Dow, our target of 12,035, which is where wave 1 has effectively matched wave 5, and it's broken through at 12,035. This is most definitely in a minor degree is technically about to, or looks like it should exhaust, but it continues to go up, of course. But we can count, and I continue to say this, we can count those very clear 5 waves within this particular pattern, and indeed in the larger degree pattern we can count those 5 waves as well. So there's nothing really sustaining this drive to the upside. The Dow Transports has diverged away significantly to the downside, and as Dow theory would have it, that is non-confirmation of the market, and therefore we're expecting to see at least a retracement back to this support line, and we'll have to assess what's going to happen from there. But it has certainly been long, and if you're in long trades, then you would hold those until we get that signal to the short side. But the length of this particular pattern has been running since the 3rd week of December now. Looking at the Australian market, the XJO today, it's currently 11:30, morning trade is just about to finish, has pushed over its upper resistance at 48.75, currently trading at 48.85. Whether that's going to hold up will of course be determined tonight. In trade, this is the cash market, so it's not the SPY, but we'd expect if that does break out, then really would have to say that 5,000 is well on the cards. So the likes of the major material stocks, BHP and Rio, and I would expect the financials to follow us along as well. But let's have a look at the Aussie dollar, which is really showing signs of stalling. This is like a triple top. Having said that, the possibility of pushing up for our target to 1025, that's 2.5 cents above parity, and this long-term overhead resistance, even if we dropped it down like that, would offer a target at about 1035, so another 100 pips above that target. Certainly the market force is not waned at all. It's long, and we should hold those long positions till in fact that breaks down. But clearly there has been some oscillation. Parity would be expected to be tested. Wouldn't be surprised if indeed the market's going to go higher up to the overhead resistance, this long-term overhead resistance. Having said that, it does also have the characteristic of an ABC, which is correction, meaning that we're looking for some downside activity, and if so, then a break under parity would give the confidence that our first target would be down around this sort of 96 level here, and we'll have a look at that later in the week and put a Fibonacci extension on it. The euro has clearly showed a similar pattern. So here's the wave 1 to 2, and it is working its way lower. So the Aussie, which is very unusual for it, is working to its own tune, as opposed to the euro, which is looking to break down, although this little reversal candle here would suggest that we'll get a few days correction to the upside before it continues on down. The financial sector, you know, it's helping to power our market up, although this pattern here looks very different from the one that we looked at the cash market, the XJO, the ASX 200, as this is a very strong trend for the financials. So all the banks are rallying up heavily. We've been long since the 13th of January, and you know, that's really pushing strongly up after finding support off this short-term resistance. On the material side, it is also holding nicely up in this ongoing trend, which, you know, this began way back in May 2010, and you know, it's been classic upward trend of higher highs, higher lows, higher high, higher low, higher high, higher low, you know, which signals the direction, the primary direction of any trend. So you know, will it be able to push way up towards the top of our channel at 15,000? Well, quite possibly the way it's going, in the event that the market continues to go up in the US. Closing out now on gold. Gold is the one that's been working against this trend of up, even though in the last few days it has actually rallied. But we've had 5 down. We're doing an ABC up. We'd expect it to go up to about $1,368. Certainly, from a trade perspective, you know, there's been a short-term long on that, and that began on the, what date's that, the 31st of January. So gradually overlapping trend, which indicates it's correctional, pushing up to around that level there. In the event that we got a strong breakthrough, big candle pushing through, then clearly you know, the market's going higher, and we'd look to come up to these previous tops of somewhere around the 1400 mark. So finally on oil, oil has been really oscillating quite wildly. You know, we've gone up to a high of $92, traded off heavily down, then sucked back up and done these sort of 2% per day runs back up, but not breaking that high at $92. You know, there's definite overhead resistance there, and of course it's done 2% overnight on the way down again. So wild oscillation there, difficult to trade that one. I can only generally go down to shorter time frames, but you know, what we're really waiting for is a break of this long-term uptrend to the downside, or indeed a break to the upside, which would see possibly $100 on the cards in the event that the US dollar finds weakness, and the global indices find strength, continue to find strength, and push up towards that sort of $100 mark. So that's it. More later in the week.